Hey everybody, Quasar Markets Live here. We've got a really good one here. Great guy, Buff Dormeier. Buff, CMT, everything. You got a book out. How are you doing, man?
Doing real well, thank you, Steven.
I'm loving this one. You know what? You are the master at all this stuff. I mean, trend analysis. You've got market signals. You are the person that everybody should listen to. You also are a Charles Dow Award winner. I'm going to get out of your hair. I'm going to let you show your charts and get right to it.
All right, let's get to it, Big Beat. All right, so hey, before we start about where we are right now, it's sometimes helpful to go back and review where you've been. So I'm going to pull up some charts from our website here. Okay, this is Kingsview IM volume analysis, and what we're going to do is we're going to go back in history and to bring us up to where we're at. And from this website here, you can read not only my current take, but you can go back in history and see what we were looking at certain key critical points of time, which we're going to just start off with here. So we're going to go back all the way back to 2022, because 2022 is the beginning
And I'm going to
of
stop you
this.
right there, Buff. The
Yeah,
screen you were showing is white. So if you can put the screen on that's not white there, we should be good to go.
not white. All right, so okay, so where is the screen sharing piece?
Right there in the middle, it says present or invite.
Okay, present.
Mm-hmm.
Usually it's a screen. I'm not seeing that option.
Yeah, I'm gonna see.
I'm gonna click out of that one and try it again.
Okay, yeah.
Share screen. Okay, so I got two monitors.
Just whatever the one's on this.
Okay, this one right here. So I might need a little help with this here. Okay, you seeing it now?
I got it. There you go. I'll leave you alone.
All right, very good. So then you can see here we're looking at way back in 2022, because it was the beginning of this secular bull market that we're in right now. And so remember, in 2022, the market had a hard time. It formed this head and shoulders pattern, and it broke the neckline here, and then things got pretty ugly. Then it pulled back down here to 3,700, which was the support level. Okay. Not only did it do it on a price level, but more significantly in my work, I'm always looking at either the volume and the capital flows. And so we looked at on a volume level, we came back down to major support. And at the same time, I don't have the line driven here, but you can see that if you were to, you can see the old base in the New York Stock Exchange advanced decline line also came back down to its support level as well. Same time, the VIX was elevated. Credit spreads were way out of whack. But here's the trigger. Okay, so what we want to do is we were looking at a capitulation sign. So when we enter a bull market, is often marked by capitulation. So all these things could look good, particularly when you're looking at sentiment and credit spreads and all those. They can be out of whack for a while. So what you need is a catalyst to know when that time lines up. And so in this case, what we're looking at is a particular indicator called the volume price confirmation indicator. Basically, what it does is it looks to see if volume is confirming or denying the price. But in this particular situation, we're going to look at it more as a sentiment indicator. When this thing gets low, and two standard deviations below its lower Bollinger Band, that's a trigger that things are setting up for a capitulation. The trigger is when it comes back up and turns back up. If it's down just a little bit, we wait for a second signal. Here it was deep, and you can see we got a really nice rally off of this one, but that was the June. but then here in early September we got one, but it wasn't deep at all. So when we get a shallow one, we look for a second confirmation. This is actually called a W bottom. So two shallows in a row. You always take the second, and this was the mark of the 2022 bottom in uh, that happened on September 30th. And again, it was called out here on my page here on 10/3. Okay, so that started the catalyst here for a new bull market, which was has been driven primarily by what I refer to as the general. These are the big, other people call it the Mag 7. These are the big large cap names, and they've been driving the market higher all the way into mid 2024. Okay, in mid 2024, this is actually the first week in July, and look at this huge volume that we had set up here. Okay, so on this day right here, we started to see some first fracturing of this mega cap movement. Okay, and notice how big, particularly this downside volume is right here. And so seeing this, all this huge amount of money that's being turned over, um, gave us a sense that this Mag Seven movement was going to be under some pressure. Okay, so now we're going to fast forward here, and we saw this kind of play out into 24, and by 2025, by early March, what we're going to look at now is looking at capital weighted dollar volume. This is how much money's moving in and out of the market, as opposed to looking at price as the sole discounting mechanism. What is price is an effect, but what's the cause? The cause is trading activity. And so that's what we're measuring here, is actually the money. Okay, and by March 18th, this money broke trend, and it actually followed the trend of volume. This is capital weighted volume, and it actually broke trend on March 11th, and this set up the what became the tariff tantrum. And so, so we take a defensive position in March because of that, but we need also a catalyst as the market is crashing uh, in in early April. Okay, and we get a signal to buy back. This is actually April 11th. This is another volume price confirmation V bottoming happening right around the 11th of April. Okay, and I was at a conference as that was playing out. The March actually is the actually true market bottom was actually a couple days earlier, before the signal on April the 9th. And I was at a conference, and people were it was an academic conference, and people were debating all kinds of different data which no one really knew because of the tariffs. And they asked me what I thought, and I said I just pointed out right here. I was like, on April 9th, look at this volume. More money moved into the stock market on April 9th than any day in history. The volume was absolutely massive, and that tells you that it's not the little guy that was coming in, it's the big guy. The big money is buying the market on April the 9th, and I'm going to do what they're doing. I'm going to follow the money. And that's really the if you listen to me, that's all I'm doing is listening to where the money's moving. Okay, that's 100% on my approach. So I'm going to switch back over here to another deck. See if I can do this. All right, I think I should be working here now. Okay, so Now let's take a look. Now that we've reviewed where we're come from, where are we now? Well, since the fourth quarter, we've been experiencing this broadening theme. The market has been broadening wider and down. By wider, I mean it's moving internationally. Money's fleeing the greenback. It's been doing that since 2025. Okay? But more recently, what we started to see in the fourth quarter of 2025 is that quality and some of these dividend stocks are now catching bid, and it's at the expense of that AI trade. So in 23 to 24, it was all about the AI producers and their components. In 2025, we moved into the AI infrastructure. And could 2026 be the AI consumers? Okay, with the catalyst being that the productivity gains of these formerly overlooked cash cows, and then it's not only broadening wider but also down. So it's moving from the mega cap down all the way into the mid caps, the small caps, and even the micro caps. Specifically, one area that we've seen with gaining traction is the small cap growth areas. Against why small caps, mid caps that could be the benefactors of AI. Some of these moats that the mega caps have may be coming down because of AI. We got deregulation, we got monetary policy, and the outlook for an improving economy. All these could be reasons for the small and the mid caps to do better. So if we look at last week, we can go over here to the generals. Okay, the generals took some damage this past week. Okay, it was down almost 2%. Okay, in contrast to that, if you were to look at the small caps, they were up about 2%. So what drove the generals down? It was the Nephilim. Okay, the Nephilim, the big mega cap stocks, the champions. Okay, such as Amazon. Amazon was down 12% last week. Meta down 8. Microsoft was down 6, and Alphabet and Tesla were both roughly down around 4%. Okay, so in contrast to the giants, we have David and the small and the small troops here up 2%. Okay, then a similar divergence happened between this green here is the equal weight, and this orange here is the cap weight. So again, we're seeing more divergence here between what's happening with our with the equal weights being more broader in play, and the more narrow mega caps controlling the S&P cap weighted index. Okay, but the one that's sticking out here like a sore thumb here, more strikingly here, is what's going on with quality and dividends. Okay, and this is represented here by the U.S. Schwab U.S. Dividend Index ETF here, and it was up a whopping 5.63%, and it's now decisively resuming command of the market. Okay, and so this is going back to that first one of those first charts I showed in 24, where the volume really started to take off. It's going back to that theme of and then there were none, meaning that some of these mega cap stocks are slowly dropping off, and now we're starting to see that happening a little bit more rapidly now. Okay, so let's take a look at what we see from a volume perspective. Now, notice the last week or so, volume has been fairly light, but then that started to change on Wednesday. But Thursday was a big day, huge downside volume, very little upside volume. What this created was a 90% downside capital weighted volume day. Okay, and so when we're looking at volume analysis, one of the things I tell people is just look at the standouts. When you see something standing out way above everything else, like we did on Thursday, that's usually a good marker. So, like back here, you saw a big standout here, and that led to a rally. Okay, now we're seeing some standouts here on the downside, which may mean that the market could be ready to pull back, or it could be just ready for some consolidation. Notice that we did have a rally back on Friday, and you saw that on the price charts. But what's not so revealing is that this volume here was only 70% for a big day like Friday, and the volume only to be upside volume only to be 70%. That's not a big number that like we saw on Thursday, where 90% of the volume was to the downside. Friday, only 70% of the volume was to the upside. Okay, moving forward here, on a weekly basis, volume was above average for the first time in a long time. So we started to see some, even last week, or 2 weeks ago. You'd think volume would be higher with the start of earnings week and the Fed announcement, but it's actually fairly average. But this past week, we started to see some volume trickle in, but 65% of that volume was to the downside. Okay. Now, what we're going to do now is this is our leading indicator. This is tracking capital weighted volume, and so long as capital is money is, or volume is flowing into the market, we want to be long. And notice that we're pretty way above trend here, and we've been seeing higher lows. Okay, and some higher highs. Okay, so as long as we continue to create these higher lows, we should be in. The volume is confirming the upward trend. Now, this is the same type of chart, but we're looking at the amount of money as opposed to the amount of volume. You can see here again higher lows, and now what we're seeing is more consolidation with the peaks, for the most part, becoming lower. Generally, when we see this sort of formation, it generally resolves itself to the primary direction of the trend. What's the primary direction? It's higher. So on an intermediate term basis, things are still looking good. However, if we were to below these lows, um, we were to get a new low, a lower low, or break below support, things could get ugly. So we're keeping a tight eye on this. Okay. The Let's move over here to the generals. The generals have been largely formed by this spinning top. This is a white candle that happened on December 5th, and the next candle, I think that's December 11th. This is a spinning top formation. Okay, uh, as its name implies, it's a topping formation, but often when you find it inside of this sort of pattern, it's more of a consolidation. You can see that for the most part, since the spinning top, we've been inside this range of these two candles. Okay, that that range was broken to the downside last week, but we closed mostly inside of it. Now, in contrast to that, we'd be talking about money moving from the mega caps down all the way to the micro caps. So now we're going to look at the troops, the Russell 2000. You can see that they, after going sideways and nowhere for several years, they finally broke out, and now we're starting to see some nice appreciation. Um, that said, we see something that's kind of looking. It's not technically a spinning top, but something that has the same appearance of that, which may be suggesting that these troops, which have been on a tear, may need a little bit of rest. Okay, and now let's go to what's breaking out. You see, I love this. I just absolutely love these patterns where you see this big base. See this big base, and what has been happening? That money's been churning all the way back from the beginning of this base, going back to November, and now we're seeing that this base has broken out. Okay, this is a bullish breakout of a large consolidation patterns. Um, Again, this is a very favorable chart pattern. Now, one of the things I'm concerned about, though, is that if I look here at how much momentum on price versus how much momentum versus volume, which is measured by these indicators right here, is that we're seeing more price momentum than we are seeing money coming in, and so that makes me a little hesitant on the short term that this may need to consolidate before it goes up again. We'll see how it works out, but this is an area of shorter term concern for me, that the momentum is strong, but the money isn't quite as strong. Okay, and next, this is a similar. We're seeing something similar happening, that the equal weight. This is the RSP, the equal weight index, also making new highs. Again, giving relevance to our broadening theme. And then the advanced decline line made a new high last week. Okay, so this shows that is mirroring the strength that we just saw in the brass commanders, the dividend stocks, and the equal weight. This behavior suggests that capital is not exiting the battlefield. Rather, what it's doing is rotating from this narrow Mag 7 at the top, and is broadening out. Okay, and this advanced decline line is confirming that interpretation. Okay, so where are we now? We see we got to watch support right around here, around 6,300. If I were to get my pencil out, I'd say 666 30 is our next support level, and the resistance is back at near the all-time highs around 7,000. If you'd like, we can cover a few more stocks here. Let me see if I can get this up for you. I'm gonna stop sharing and start again. Hey, I'm getting better at this, I think. All right, all right, great. Okay, so let's look at a couple stocks. Okay, MFG. Okay, MFG. You see, this stock has really broken out. But look what we see right here. These are all stocks that are reporting earnings this week. We're going to look at 3 or 4 stocks that are reporting earnings this week, and look at the interpretation. Okay, so MSG, first of all, it's a dragonfly doji. Okay, which is a pretty poor omen in chart analysis. But what I'm looking at again is what's happening with the RSI, which is representing price momentum, versus the MFI, which represents uh, capital flows. And the RSI is way ahead of the MFI, which makes me feel that, hey, this is something that I would be concerned about, uh, concerned about holding. Okay. The next one we're going to look at reporting earnings this week is SPG, Simon Properties. Okay, now again, this is another stock with a really nice base. Okay, so I'm liking this base right here. I like the breakout. It's not too far ahead, but shorter term, I'm a little concerned because for the same reason, the price momentum is ahead of the volume momentum. So I'm having some concerns over this, but I do like the overall pattern looks strong. Next, move to BlackRock. Okay, this is actually a poor part. This doesn't look all that good on the charts, but there's more money flowing into it than out of. The money flow is more positive than the price momentum. So this is something that you might see a bounce on this week. We'll see how how it shakes out. But this is more of a bullish pattern. And then let's take a look. This is of everybody's interest. Let's just take a quick look at silver. Okay. So let's first of all look at silver on the dailies. Now, Big Beat here has been calling this out for about over a year now, and sure enough, this thing has been everything that it was played out to be and more. And that's what silver often does. So silver, when it goes, it flies. Okay, it's like a powder keg, and when you broke out of here, you broke through that powder keg, and boom, and it exploded. Okay, and then it came. What it does, silver, when silver moves, it moves fast, and it moved down fast. So right now, what we've seen is that this market has pulled back. It's consolidated the move, and short term, this looks like positive on the very short term. Again, what I'm looking at is momentum. The momentum is stronger on the money flow than it is on the price action. The price action pulled back much stronger than money flowed out of it, which is a short-term positive move. Generally, though, when you see something like this and in any sort of pattern, what you're going to see is some consolidation. So it's not likely to go straight back up, and it's not likely to continue to drop further. It's likely to pick out a consolidation range. Maybe we have a little bit more to go on the lows. We'll see. There's certainly a lot of support closer to the 50s than what we've seen here in the 57s. You can see that here with the volume at price. See, there's really very little volume in this upper range, but there's a lot of volume down here. And this is where you're going to find support closer to in the mid 50s is where the significant support is. But short term, this looks positive. Okay, and now let's just flip this over here to see if we can get a weekly chart on here. So I'm going to change this to weekly. On a weekly basis, it's just the opposite. So when we look at it on an intermediate term, this has pulled back deeper than this, and so this makes me feel that on the intermediate term that may need to wait a little bit longer on the silver move. So that concludes my analysis with you today. If you have any stocks that you want me to cover, you can email me at buff@kingsview.com, and we can pick them up in the next few weeks or so.
And I put your email out there for everybody to see it there, buff@kingsview.com. Click on hit him up out there, and he'll answer those charts for you. I know you love charts because you're on the CMT Association. Is that right, Buff?
Absolutely. I love the charts.
I love it. And we'll see you right back here next week, right, Buff?
Next week I'll be on break, but maybe 2 weeks. Does that work?
Sounds good, man. I'll see you in 2 weeks, Buff. Thanks, man.
All right, thank you.